Hello traders, Gary Wagner here. Approximately 11:45 a.m. in Honolulu, Hawaii. It is Wednesday, the 29th day of June, and this is the daily report for gold. In an incredible showing, we did have gold trading substantially higher, up about $11 on the day. Traders, we are looking at a grid of four different charts. On the left-hand side here, you see daily charts. The upper is Henkin format, lower is daily candlestick. The same thing when we go to the right-hand side, weekly, and then the upper is weekly Henkin. There is no doubt that we have found really good support in this marketplace. On a technical basis, there's a couple of ways we want to view that. If we take a look at our daily Henkin chart, what I've done is I've simply added a Fibonacci retracement. The retracement is going from this low at 1380 up to our record high, which is 1577. You can see that as the market traded higher and reached the top, when it came down and corrected, it actually corrected to the 61% retracement area, which you can see at 1455. As the market moved back up, it was unable to take out these highs at 1577 and in fact made a couple of lower highs. And that's the resistance that we are currently seeing, and that's right around 1551, right in here. But as the market hit that resistance, the interesting thing is when it came down very, very close to our 32%, which is 1502, moved back up, found resistance again. It did make a slightly higher high. This was 51, I believe this was 57. And when it came down, it actually broke below that 38% retracement level. However, as you can see, the activity over the recent last few days has put it well back above that and absolutely found support in this one particular area of 1502. Another way we can look at this support is when we go to our daily chart. And on our daily chart here, you can see in terms of a straight channel line, it was also able to fall on this channel line right in here and did find support. We actually have received, in terms of a straight candlestick pattern, a piercing line confirmation right within these last 3 days or 3 candles. So that what we are looking at is, my belief is that the bounce that we are witnessing right now should propel this market, even if it's still in a correction. And the fundamentals are so strong that I always need to go back to them. And my belief is that we're still in the Super Bull cycle. So even in a correction, and even if it's a mild correction, this particular wave that we're in right now will take us either to 1524, which is 50% of the retracement from this move at 57 down to the lows at 1488, or it would take us to 1542, which takes us at about 75% in terms of the retracement of that particular move. Now, when we take a look at our Henkin candles, realize that a Japanese average chart is always going to lag, but our daily has already gone green. It's a very small candle. You can see that on the prior session on this particular chart, we got a very, very small green candle, almost doji-like right in here. And then the green candle, we also have the absence of the lower wick, which tells me that it is starting to show some real strong signs of a trend reversal. In other words, that this last corrective wave has concluded. The last technical piece of information I want to bring to your attention, and this is why I've been hesitant to enter into the market, is I want to see what kind of reaction we get in terms of the big picture. The big picture is just a Fibonacci retracement from our February and January correction, 1308, 1577 as the high. And as you can see, the 23% retracement is 1513. That's this line right here. And we did have this market, although it traded to this channel line here, it also stalled, at least tentative, in this area. It's important for me to see how the market reacts. If it's able to break above this, it will signal one thing. If it finds resistance, it's going to signal something else to me. Traders, we are in most interesting times. This is not a typical market. We have been in an incredible bull market. We've had incredible runs in this market, but in terms of trading activity in the recent last couple of months, you can see it's been caught within this trading range right here, and that's what's made it difficult. We have not had a market that, like we saw last year, had tendencies to really rally and have these sustained rallies. Rather, this market has found defined resistance up around 51 to 57. It has found very, very defined support right around 1488. That is the area that we have to watch. We're really trading right now in mid-ground. So depending on how the market reacts will depend on the signals that are forthcoming. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange, so strange. You got to pick up every stitch. You got to pick up every stitch. You got to pick up every stitch. Must be the season of the wind.